fully what's called full striped line in pink. That's the weekly low, and we have the weekly high up here. All right. This is just to understand where we're at. Now I take the fib back, and you will understand another thing, that we just bounced off the 61.8 retracement. We bounced it off, and we found super good support there, co-influent with the 200-day EMA. Now, what does that mean? Not very much. It just means that we have found support at the same level as multiple previous times. And it's a sign of strength. The market wants to pull up. But in this case here, we don't believe in it. Why? I think it's a fake sign of strength. I'm going to explain why. So here's the thing. First and foremost, if this was such a sign of strength, then we would have pushed through the baby blue striped line here, the weekly daily key level. We didn't. We bounced off. And we have something very interesting up here. So we have this blue box up here. That is an order block. That is this whole wick that you see here on the 4-hourly time frame. That is actually a very strong order block, because it broke structure down here and it created a lot of fair value gaps. Now, right underneath it, we have a green box called the XCon box. Why is it called the XCon? It's because we have massive co-influence here, massive co-influence. Now, co-influence, what is that? That is, for example, what you see here. Key level, the baby blue striped line, co-influent with the 200-day EMA. That is co-influence. We have here, if I remember correctly, I'm not going to pull up everything, but we have the 200-day EMA, we have the key level, we have fib from top to bottom, and we have fib from this top to bottom. I think it was like that. And an extension from sub-fib. So all they co-influence here. That's why I call it the XCon, extreme co-influence. So what does that mean? That means market came up here, picked liquidity, and is now using the XCon as support, as resistance. This is heavy resistance.
What numbers are that?
Say, bro?
What's the numbers?
Good that you remind me about that. So the numbers, the XCon, or let's say the daily key level, is at 1924-ish. Between 1924 and 1925.8. So between 1924 and 1926, you have this extreme co-influence of support resistance, all right? And I firmly believe that we might see a little, now when the Asian session starts, we might see a little wick up to grab some of this liquidity left up here in this wick, and I think we're moving downwards. I think we're gonna sweep this order block that we see here on the 50 minutes. It is actually bigger on the 4-hourly, and I think we're coming down all the way to here, to this order block here. And this order block, this is an extreme order block, a very strong order block. That caused this whole momentum upwards. Takes a lot of liquidity to cause this. So therefore, we know also that there's this big block of orders laying there waiting for us. So what we're looking for now for start of the next week, or for in a couple of hours, basically, because the Asian markets is starting soon, is a sell from this level down to this order block. But here's the beautiful thing with the Asian session. What is that? That we are going to be asleep while Asia does some action. And I believe that this action is going to be some accumulation inside this order block. As I said, sweep some of the liquidity left behind from this wick to then come into our range. So when we wake up in the morning, before London session, pre-London session, we already want to see how the market has positioned itself. And if we are ready to enter it for a sell, or if we want to see more confirmations. But I'm pretty sure that we will see a sell on Monday. And if it's not one of these super slow, super boring Mondays that we have had lately, but hopefully not. So we will see. So this is what we're looking for. We're looking for sells on gold. Frederick, any comments on that before I proceed?
No, I'm agree. I think
All
because
right.
it is
And I know
Hmm?
I know you keep track on the US dollar. So what is the US dollar saying towards this?
I think the US dollar is going to drop a little bit down to pick some liquidity, and then it's going to continue up. Yeah. Kind of,
All right. So exactly these liquidity zones. Perfect.
because
Then
it's
we're on the
just growth
same
structure.
page. Yeah. All right. Perfect. So then we're on the same page on that. And if it taps into this to grab some liquidity and then move up, as you guys know by now, gold moves in the reverse. And what did I say about gold? This. So this is perfect in reverse movement. All right. So that's what we're looking for then. We move on. 1 second. And we move on to BTC USD, Bitcoin. Here's the thing when we're talking about Bitcoin, and I know most of y'all already heard it from y'all that are on the Discord stream. Y'all know that I've been speaking about this before. Bitcoin is coming down to these levels here, to these boxes here. I think it's coming down to around 11,000, 12,000, maybe all the way down to this super order block that we got here on about 9,000. I know for a fact that there's massive amounts of orders laying down here, waiting to be triggered. And how do I know that? Is because, yeah, depth of market. And in crypto is quite easy. A lot of exchanges have depth of market, but very few retail traders use it. Which I recommend. If you trade crypto, use it. Use it. It's super. Like you see the order volume laying in limit order. Of course, you cannot see market execution because that's something that happens instantly. But all the limit orders, you can see where they are placed, and sometimes you see this big, heavy clusters of market limit orders. Like here, for example, I know there's for a fact there's a big cluster of limit orders down here. It means that if market comes down here, which it pretty much wants to, it wants to sweep all this liquidity built up on this trend here. For that massive bull run, it needs to sweep all this liquidity. Here we got an extreme order block, an XOB. So at least down here, this is the trade that I have marked out that I'm seeing, but I believe actually that we're coming down all the way here. Now, this is not going to happen in a day or two. This is definitely a swing trade, but just so you know the direction we're looking at. On the way down there, of course, we will see bounces, mini pumps, fake bull rallies, and whatever. So let's see for how long time it will take for market to melt down all the way down there. But I think that meltdown will come simultaneously with the NAS or with the index meltdown, with the NAS, with the US 30, and all of them melting down. Because we've been talking about that as well. Market will come up here to this demand zone, to this order block. Not will, but it's a high probability that it will. We cannot say it will do because we never know what it will do. But there's a very high probability that it comes up to sweep this order block. And then from there, we will see a massive meltdown of indexes, all indexes, the stock markets. And they will grab Bitcoin with them down. But the difference is that Bitcoin will bounce off much quicker, much more resilient. And that is pretty much because people will that are selling NAS, that are selling stocks, they will look for something else to invest to. And those two options will be crypto and gold. Most people, of course, into gold, silver also, copper also. But then there's a younger generation, and they will look a lot into crypto, because a lot of people also know that the new crypto bull rally should start very soon. So people want to position themselves, and if it drops again, it's going to be a massive discount for us. Okay, so what are we looking for to grab this sell here? Well, I'm explaining it. I'm gonna go in on a lower time frame so we see this better. All right, so this is what I'm looking for. I'm looking for this order block here. This is a very strong order block that we got up here. And I mentioned this order block already when we were down here. I said that market needs to come up, sweep this order block, and then we drop from there. And now this whole week we've been moving closer, but we're not there yet. So we will see what happens now when this week opens. We swept this fair value gap here that you see. We have another fair value gap right above, but I'm pretty sure we might see something like this. Tapping into this fair value gap, having a mini sell-off, and then up again to the order block, and then we're having the real sell-off. So that's that for Bitcoin. What are the levels that this order block is where we're looking for the sell? It starts at 27,300 and it goes all the way up to 27,530-ish. So that's that, and it's the wick. If you're on a 4-hourly time frame, then it's the wick here that I'm using as the order block. It's a wick block, or call it what you want to call it. That is for BTC. That is for gold. We're going to take a quick look at USD JPY. Why? Because we actually got an active trade on that one, and it has moved exactly nowhere. So I called this trade out Friday afternoon. I think it's right after New York open, something like that, 4 o'clock, 5 o'clock maybe. So it was quite late. I normally don't call out trades that late, especially not on a Friday. But it looked so juicy, so I had to call it out. And I still think that this trade is actually going to go all the way up here. Not only TP1, TP2, but I think we're going to hit all TPs. Why? Because there's a lot of things pointing towards that, especially if we look at gold, not gold, US dollar. US dollar, as we just mentioned, is going to do a little dip and then pump. And when US dollar pumps, USD JPY pumps. And plus also we got a very weak JPY in itself, Japanese one. So that one is it just keeps dropping in value. So the only thing we're hoping for is not to get stopped out before this happens, because we might see a little liquidity sweep, maybe down to this order block again. It is already mitigated, but we might see something more because we also do have actually fair value gaps down here. I don't think we're coming to sweep them, but we'll see. You never know. I don't think we're coming to sweep them yet. So I think we might see something like this, and then we push it up towards our goals. So, but like I said on the Friday live stream for the VIPs, I said that close half of your positions on this one. Why? Because we want to take some of the risk off the table while we're at break even. We don't like to hold trades over the week. You never know the gap that might happen when Monday starts. Market might start down here or up here, so, and leave a significant gap behind it. But that is that for USD JPY. Euro USD, I haven't looked at it, but let's take a quick look at it. All right, good that we did so. Hey, by the way, Frederick, you got some inputs on USD JPY?
No, it's confluence with the dollar, so I'm good. It's perfect.
Perfect. All right, so when it comes to Euro USD, well. Let's move some of these lines and distractions that we got here.
That trend is perfect, man. It's moving in a perfect trend.
Yeah, this one is sick. It's a super sexy trend. So what we got here, as we just said, is we got a perfect trend moving downwards. We're on a 4-hourly time frame right now. And I said it all the time that if we break the 88.6 Fibonacci retracement, let's first look at where I pulled the Fibonacci. I pulled it from this low, this significant low that we had here, and to the significant high that we had here. And so it's a major swing. So therefore, also it's a very strong Fibonacci levels. And on the 88.6, it was bouncing off, tried to break through, came back in, bouncing off. And I said, you know what? I think we're bouncing off the daily key level that we got here, confluent with the 78.6, and we're dropping down to test this key level here, this daily key level here. And that's exactly what we did. We came down, we tested it, and what happened? We passed the test, we bounced off. So anybody that took a trade from here, congratulations, you took some pips. Now here's the thing. Here's the thing. Let's go in an hourly time frame. We have change of character. So we have confirmed that markets might move upwards. And that means that market maybe wants to go on a mini upwards trend to clear some of the liquidity left behind. Because always when you're exiting a major trend like this, for example, there's a lot of liquidity. You have liquidity okay, this liquidity is already swept, but this, like all of this here is liquidity. And market needs to sweep it. So a market needs it to move. And as you see, there's a lot of fair value gaps also.
I think it's gonna drop more, bro. I think it's gonna retest the 88.6 because it's in the middle of the fair value gap. It's just gonna bounce off.
Here, yeah, exactly. And that was my point. So I was gonna come to that. I think the market that EURUSD is going to move up a little bit. I think we are having a little pullback now because of just to come down, maybe just come all the way down and test this key level again. As you see, it's perfectly confluent with the 88.6. I should almost pull an extreme con box down here, but I think we might come all the way down here to retest this key level, and from there we will have a nice buy opportunity, at least up to, like Frederick mentioned, the 88.6 here, just to fill a little bit of these fair value gaps, the liquidity that is left behind here. So that is what I'm seeing. So actually, go mark this out. I see a possible buy opportunity here. We will put the stop loss just behind, just under the 27.2 Fibonacci extension, because if it breaks this level, this is a level where market likes to bounce off from. Then we have an extra security, so to say. And take profit will of course be all the way up here, almost confluent with the 27.2. But yeah, that's what we're going to. What is it? 63 pips. So that's good, with a stop loss of 25 pips. So that's all good. That's what we're waiting for. But of course, Monday opens, we see what the market does. Maybe it starts to do something like this, so just dumps straight through. But this is the possible scenario.
Makes sense.
So that's EURUSD. It does, yeah? Wait, what do we have on the dollar? We have a drop. Yeah, man. Yeah, kinda. We might see, yeah. So we might see maybe something like this. Yeah, man. That's it. Frederick, you got something to comment on these things?
No. You have control over the market, so it looks good. We don't need to go on 5, 6, 7 pairs. We keep it simple.
Exactly, and that's our new thing. Me and Frederick, people get confused, so we decided to just keep it very low key with a couple of pairs that we zoom into, break down, and keep track on. So it gets easier for you guys, the viewers, and for us also as well. This is the order block we're looking at. Yeah, man. I think that's it.
I like the order block on 61.8 also, to be honest.
61.8.
Yeah, to the left.
This one.
Yeah, I think it's juicy. If it's take that, it's going to continue to the upside if it doesn't break it. Because
this here.
Yes, because it's already taken out the 78.6, as you see.
Yeah.
And I think next retest now is the 61.8, and then it's going to continue up.
Yeah, man. Very, very likely. Very likely. So all right, guys, that's it. Short, quick stream. Frederick, any finishing words? I'll let you finish the stream.
Oh, it's good. Thank you for meeting everyone, and then have a nice evening.
All right, guys. Peace out.